Welcome to a Junior VC Unfiltered. I'm your host, Mazen, and this week I have with me Chetan and Shali. In this episode, we'll discuss our latest piece, Will Eruditus Bring Education to the World's Fingertips? So Chetan, can you get us started by telling our listeners why we chose this topic?
Yeah, thanks, Madan. So firstly, today's Teachers' Day. So happy Teachers' Day to every teacher out there. Thank you for making us who we are. We wanted to cover something in the education space, and we noticed a very interesting startup which has been under the radar for quite some time. And it suddenly emerged by raising a 650 million round at a 3.2 billion valuation, which puts it as India's third largest EdTech startup. So we wanted to uncover the story and show you what went behind the curtains to make this behemoth.
It's a really interesting story. Chetan, can you tell us how they got started? How did they build, I believe it was a $10 million bootstrap business focused on executive education?
Yeah. Interesting story about the founder, Ashwin. He started out his career as a CA, then broke into Harvard Business School, and there his mind opened up in terms of understanding the industry. Talking to professors gave him a lot of insight about different markets, and meeting founders actually gave him the entrepreneurship bug. So he would end up participating in a B-plan competition over there, where he would come runner-up with another batchmate of his. And they'd start it into what was called as Travel Guru. It was an online flight booking startup, which later expanded into hotel bookings as well. It ran into a little bit of trouble because the timing was bad. They were at the back of the 2008 financial crisis. And it ended up being sold to Travelocity, which is one of the largest travel startups in the world, which later, eventually in 2012, got sold to Yatra. So even though his success could be termed as lukewarm with Travel Guru, he ended up learning a lot of things about network effects, being in a competitive space, and also the risk in maximizing valuation. Undeterred, he would end up meeting his co-founder, Chaitanya, who was also from quite a good B school in Seed, which also happens to be Mazen's alma mater. So the two of them would end up foraying into the EdTech space, because they realized that they received one of the best education in the world, and the way it changed their lives was profound. They wanted to enable the same and unbundle the same for the rest of the world. So in 2010, they set out to start Eruditus, and Eruditus was quite focused on the executive education space. It was completely offline. So back in the day, Harvard used to run a 4-day program wherein they charge you 1.5 lakhs. Now, as an executive program, it was meant for working professionals. So unlike the traditional 2-year MBA, things were catered to people who already had a busy working schedule. So it was shorter and much more concise. So Ashwin thought that the fees was ridiculously high, especially for Indians. So he recruited 2 professors, one from IIM-A and one from INSEAD, and rolled out a 10-day program in a 5-star hotel. And he charged just 50,000. If you do the math, that's 5x more value. So he thought this is going to be a no-brainer. But unfortunately, only 12 people showed up. Right? Now, the reasons for failure, when you look at it in retrospect, seem obvious. They were small cohorts, so there were no network effects working out for them. To add to it, these courses could only be done during the off-season for universities, when these lecturers would actually fly down and teach these people. So it was quite hectic. For example, a professor would probably land at 2 a.m. in the night, give 8 a.m. lectures through 3 days, and then fly back again. So although the course failed due to a multitude of reasons, Ashwin and his co-founder noticed something brilliant here. The students kept attending regularly, so the attendance was perfect. And the professors also liked teaching these students. And they saw value in what Eruditus was doing. So they decided to not be set back by this and double down on it. So they continued focusing on creating short to long courses for experienced professionals with about 5 to 10 years of experience, primarily in fields such as management, leadership, banking, and finance. So the premise was that it would either help you take a step up in your own career or help you pivot to a new one, depending on what you studied. And interestingly, they remained bootstrapped. While there was a funding frenzy going on in the Indian startup ecosystem, there were big names like Housing, Flipkart, and Snapdeal raising boatloads of money, right? But Eruditus decided to go for a non-hype, steady, and slow growth. They focused on keeping the LTV minus customer acquisition cost positive and build relationships with these large Ivy League colleges, right? And the fact that Chaitanya himself was from NCED helped. He played a pivotal role in forging that deal between Eruditus and NCED. And soon other colleges followed. They had tie-ups with Harvard, Wharton, MIT, and slowly the other dominoes fell, and they forged a bunch of relationships with these colleges. As a next step, they decided to expand their footprint to a global market by setting up classes in both Southeast Asia and Dubai. And now that they had reached a profitable enterprise and were expanding globally with steady, good quality of classes and hence a good product, they were ready to hit the gas pedal and accelerate their vision by raising some money.
Quite a fascinating founding story and how they got to that amazing milestone. But Shelly, can you help us set the context a little bit? Tell us a bit about the EdTech space and where exactly Eruditus fits in to that whole equation.
Yeah, sure, Mazen. So as Chetan pointed out, back in 2014, a lot of startups were coming up, Unacademy, Byju's, they were getting online traction. Mass open online courses, MOOCs were also on the rise. By 2014, there were around 2,400 courses registering close to around 17 million students. Compared to that, Eruditus had less than 20 courses at that point of time. So companies like Coursera, EDX, Udacity, they were building partnerships with these professors in universities in a similar way like Eruditus does, but they were basically offering short courses online. Eruditus model was entirely offline at that point of time as well. Despite their ability to attract these universities, they were sort of unable to, due to their offline model, they were unable to acquire investor interest. And by 2015, they were rejected by at least 20 VCs. So the founders were confused as to what were they doing wrong. After trying to get investors, they eventually raised $1 million from friends and family. And then they decided, okay, now it's time to move in a blended model, not completely offline, but move from offline to online plus offline. It took them about 6 years to reach to an annual revenue of $10 million and then grow steadily. So that was the background of what was being done in that EdTech space. But Eruditus realized after 5-6 years that online was the way to go. Now, how do they go online compared to the MOOCs that were there? That was also an interesting story, and it evolved over a journey. So they basically call them SPOC, which is small private online courses. Now these courses are different from MOOCs in a lot of perspectives. First of all, MOOCs had a completion rate of around 15 to 20% or even less during 2015-16 time. Whereas compared to that, Eruditus offline courses were having a completion rate of 85%. So in the market, they understood that the need of a teacher in a physical space or in a live session is important for getting these courses to be completed. So that is how they started working on the SPOC model. Even now, they create their own courses with the universities. They simply do not deliver the courses that are already being offered in the universities, like edX or Coursera does, that they just present the video content of the courses being provided by these universities. They actually sat down with the university professors, curate these courses according to the market that they are targeting. For example, they are focusing on multilingual offerings. So they are producing content in various languages, which can attract markets like China or Latin America and others.
That's a really interesting model, how they were able to kind of find this niche and expand on it. And, can you tell us a bit more about their business model? How do they make money, and what does the competitive landscape look like, and how has it evolved over the last 5 or 6 years?
So they basically partner with these universities where they create a course. Now the take rate for these universities depends on the complexity of the course and the involvement of the teachers who are actually creating this course. That is one. Their courses are usually high ticket value. They range from $5,000 to $30,000. So that is how, and after giving the take rate, whatever remains is their revenue. Now, that is basically their business model. Now they are evolving through 2016 to 2019. I will give you a more broad perspective on that. So by 2016, the part of tech in EdTech was missing. Right, they were offline. They realized that they had to go online. So they started to think that, okay, we'll now need to raise funding, and we'll also have to expand our course offerings without diluting the impact of the course, because ultimately their focus is outcome based. That after a student does their course, it should not be that they just complete the course for the sake of a certificate, but they actually help these executive professionals to go one level up in their own field, or help them in a career track change. So that was their objective, and that on that they are building upon. For example, in 2017, they started looking that, okay, now since we are online, we can attract a larger audience apart from India and Southeast Asia. So they started looking towards markets like China and Latin America, because being online, the students could attend these sessions anywhere from any part of the world. Plus, the number of students that could register on these courses could drastically increase because of the online model. Now, hearing all of this seems very common in the current pandemic time, because everyone is learning online. But back in 2016-17, it was a new thing that they were doing live sessions and doing sessions with teachers in person. So that was that. Also, the market growth at that point of time was being led by the growing interest of these individuals to basically upskill or reskill themselves according to industry demands or the job market. Corporate tie-ups were also increasing. Like Eruditus had corporate tie-ups with TCS, Reliance, Asian Paints, etc., and they are increasing their corporate tie-up base also. So there are two parts to their business model. One is B2C, where they serve the customers directly, and B2B, where they serve the corporate tie-ups and curate courses for their specific needs. So that is that. And then in 2019, they further raised funding to expand on courses like artificial intelligence, machine learning, because these were the new things that were coming up, and Udacity, EDX, etc., were providing these courses, and they were selling well. So they decided, why not broaden our scope from just management courses to these courses as well. After that, basically, they realized that the cohort based learning model was very effective for them, and from then they have just built upon it. Right now they are sort of trying to enter into the K-12 space through some micro programs, but yeah, that is overall they would still be doing these long form content where teaching presence is mandatory, but yeah, they are trying to move diversify into K-12 as the likes of an Academy and Byju's.
Just to add to that, I think just looking at the EdTech landscape, you'd see that Byju's went from K-12 to the higher end of the market by acquiring Great Learning, and Eruditus is moving backwards. It started with executive education and is moving towards K-12. So every EdTech company sort of like the trend has been to go over the entire journey of like right from K-12 to test prep to higher education. And I think even Eruditus wants to do that. And the founder has said that they might get larger than Coursera in the coming year by hitting a 500 million ARR. So interesting times ahead. Yeah, go on.
It's definitely a bold statement from them, and a truly amazing story of how a company started with a niche and built from there, found product market fit, did something that didn't scale offline classes and gradually took it online. Thank you so much, everyone, for tuning in to Junior VC Unfiltered. We really hope you enjoyed this episode, and we will see you again next week.